Hello and welcome to the Mutual Fund Show. My name is Neeraj Shah, and over the next 25 minutes we'll talk all about mutual funds. Well, CRISIL has put out its quarterly mutual fund rankings based on the performance of different schemes in the April to June period to find out which ones have made it to the top and the scoring process for the same, and we also try and figure out which ones have not made it. Let's welcome in Bhushan Kedar, he's director at CRISIL Research, joins us right now on the show. Bhushan, good having you. Thanks so much for joining in.
Yeah, thanks for getting me on the show, Neeraj.
Not at all. Tumultuous period for mutual funds. Has it been difficult to figure out which funds will do really well and therefore climb up the rankings as well, because there was a fair degree of volatility not just in flows but in the market movement as well?
Sure. So, Neeraj, in terms of criteria, the approach that CRISIL has built over a period of time, one takes care of such volatilities that markets would typically go through, and what we also look at is for typically the equity fund that we're going to be talking about, 3-year performance data, which basically takes care of maybe one or two, different cycles, for the purpose of evaluation. Over a period of time, we have seen as, you use, a longer period data, it really helps you, take right evaluation of the fund. That's one. And two, we also look at the latest period, weights are the highest, which also gives you a sense of, the momentum which is there in the performance is captured appropriately. Coming back, are there any changes in the criteria per se? At this time around, no. However, what we really do each year, during March, is we actually also look at, if there are changes in market dynamics, and is there anything that really needs to be changed in the criteria for the purpose of evaluation of funds that actually carried out formally. It's a review process. Of course, there are not really any significant changes per se from an evaluation standpoint.
Okay, so let's talk about the funds. Now we've classified, for the sake of simplicity, viewers, in this conversation into 4 categories: large cap, multi-cap, mid-cap and small cap. And let's start off with the large cap funds. The rankings and the number 1, number 2, number 3 funds are the Axis Blue Chip Fund, the Tata Large Cap Fund and the DSP Top 100 Equity Fund. Now, all of these clearly have inched up from where they were in the months of March. Why has this happened? Can we start with Axis, for example?
Yeah, sure. So, maybe to recap a little about the framework, it's actually a relative framework. So, there are 2 reasons why funds really move. One is their absolute performance has done either better or worse, and 2, since it's relative, if there are other funds which would have either done bad or better than these funds, so that's really a reason for the ranking or change in the ranking really. Large cap as a category, in terms of 1-year performance, you'd see what has really happened is the markets have been, maybe flattish. I mean, the numbers have been around 10 to 12% is what the market has really earned, and that too, the performance has been skewed by some of the specific stock that you would have seen in about top 10 to 15 stocks is where probably we have seen some rally, and that has really led to the performance. In the small and mid cap, where we've actually seen either a flattish or a negative performance also. With respect to these specific funds, I think all of them have actually moved up in the in the performance itself. So, we score funds, 1, on the basis of a mean return that they would have earned, and 2, also on the basis of the risk profiling or the parameters that we really look at concentration. What we have seen in the large cap category, these funds have typically moved up in their performance ranking also, and that is actually something that gives a major boost to the overall ranking, and that's really a reason that they have gone up. Axis specifically, if you were to look at one, besides the performance, they have also improved on the index concentration bit by a notch. They were 5 last time around. They moved up to the 4th rank. And in terms of specific stocks, if you were to look at, I think Bajaj Finance, which they held, Kotak Mahindra, HDFC, all financial services entities, and that has really led to outperformance for them vis-a-vis benchmarks as well as their peers.
Well, even the others. I mean, it's obviously that when you look at the components of the number 2 and number 3 fund as well, which is Tata Large Cap or a DSP Top 100 fund. They have an overarching preference for financials, and that's probably the reason why they have inched up to the number 2 and number 3 rank.
Correct, that's right. And Neeraj, I think we'll have to also look at the large cap universe's top 100 stocks. And when we are talking about top 100 stocks, which you would also see in, say, Nifty 100 or something, there's already a skew in the financial institution segment. And I think that's really a bias which is there in the universe, and you really can't shy away from, or you really don't have a choice, but you'll end up taking the stocks. Fortunately, these entities have done well. That has really added the performance. What probably has really not gone, in right way, or probably has created some deficit or maybe negative alpha for some of these funds in the large cap category is the performance of the large cap indices. The total return indices that you would have seen have actually outperformed many of the large cap active funds. Okay, and I think that is where people have now started looking at these funds more closely. Small cap and mid cap, you continue to see there's alpha being generated by active funds, but I think large cap, I think is where there is there's clearly some gap that you sort of are seeing in the active versus the passive funds.
Yeah, clearly. But the good part is that at least for the top 3 funds that we're talking about, compared to the categories, compared to the peers, I think the performance and the absolute returns have both done much better than what the others have, and which is why I think number 1, number 2, and number 3 are Axis Blue Chip, Tata Large Cap Fund, DSP Top 100 equity funds. Now, we just keep in mind, having spoken to CRISIL now for 2 or 3 times in the last 1 year, these numbers can change depending on what the funds do in the ensuing quarter. So what could well happen is the number 1 fund right now could well move on to the number 2 position as well. That is not to say that therefore these funds are bad to invest into, but at the current point of time, the number 1 ranking goes to Axis, and similarly number 2 and number 3 to the Tata and the DSP fund. What has been, well, maybe relatively tougher to perform in than large caps is the multi-cap funds. The good part about multi-caps is that they probably had it relatively easier than the mid-caps and the small caps because there is the presence of large cap. But it's a category that a lot of people have now started seeing interest in. I hear a lot of advisors say that if you're starting off or if you want to make some large allocations because small caps and mid caps haven't performed really well, go in for multi-caps because they will balance your risk as well with the large cap presence and give you the alpha as well with the mid caps and the small caps. What has done well there and why? I see 3 names. Again, moving up on the ranking front for most of them, say for HSBC, but Kotak Standard Multi-Cap, SBI Magnum, and yeah, those are the number 1 and number 2 funds.
Sure.
Why so?
Yeah, sure. So I think since you spoke about investors and their preferences, maybe it's quite logical in that sense. For a new investor, it's not really, they may not have wherewithal to really, pick up the right capitalization. Okay, and that is where they would want to leave that decision with the fund managers who understands the markets better. Multi-cap is when you're taking a bet on a large cap, obviously you're putting money on large cap and small and mid cap, likewise. But in case of multi-cap, you're leaving it for the fund manager, and then he decides where to put the money at that juncture. And what has really happened in this case, and the skew this time around is, on the large cap because they were doing well. If the markets were to swing the other way and suppose mid caps and small caps, start to sort of rally, you would expect the fund managers to allocate more to those portfolios, and I think that is where the end investor can really benefit. So I think that's really, I would say, a beauty of the specific category. Coming to the funds that we are really looking at, the Kotak fund and the SBI fund. One clearly, again, because the skew is towards large cap and the BFSI entities, ICICI Bank, Hdfc Bank, Axis Bank, and one, I would say a manufacturing or conglomerate name, L&T, that sort of appears, and all of them have really contributed to its performance. Typically, the allocation the fund has really done to these entities is anything between 5 to 10%, and because they have really earned, or made a decent performance, I think you've been able to get more contribution from those stocks to the overall alpha of the fund. Importantly, I think some of these funds have also consistently performed well over last 3 years. So it's not last quarter or something, but you look at any period, 3 year, 9 months, 3 months or 3 year. I think across all cuts that we look at from a performance standpoint, I think Kotak Multicap has definitely done well across these different cuts.
Yeah, certainly. I mean, I look at the 3-year performance about 14.23%, and therefore it's done really well. I can see that SBI Magnum Multicap as well. I think number 2 ranked fund has done reasonably well over a 3-year period. I think again the common part out here, viewers, seems to be, if you look at the components of the top contributors for both Kotak as well as SBI Magnum, it seems to be skewed towards financials again. So large cap financials have helped both of these funds do rather well for themselves. What's not worked for HSBC, even though it still retains its post in the top 5, the 9-month returns for HSBC Multicap have not been good. And maybe they've had a choice of stocks which somehow have not been able to perform. I mean, yes, they were skewed to financials with the likes of Yes Bank and Bharat, but those are the financials that didn't do well.
Yeah, absolutely. So I think the answer lies in the stock selection. To some extent the allocation also, but clearly stock selection and to the period for which you're actually holding the stock. So, in the recent past, Yes Bank, Bharat inclusion, we spoke about Aurobindo Pharma, Sun TV, I think, of course, have not done in some of the recent times, but you have also see stocks like Tata Motors or for that matter Welspun, which were there in the large part of their 3-year portfolio also. So they held it almost throughout the period, or maybe 80% of the time, so which were basically dragging down the performance consistently. So I think that is where stock selection, 2, the conviction about about that stock, and 3 is really the allocation that you make. I think all of them have really led to drag on the performance for the HSBC fund here.
Okay. Wonder what's happening with the Tata fund, the Tata stable, because I see their presence increasing. You're not normally seen them in the past, but in the large cap category, they are in the top 3. In the mid cap category, they are in the top 3. We're moving segments out here, viewers, now moving on to the mid cap space. But just before we get to those individual funds, is it a choice of fund managers or change of investing strategy or something in the Tata AMC?
So sure. So I think some of the bets that they are now putting on have definitely working. What I really see, in terms of their conviction about their stocks, I think the ratio of staying put with the stocks continues to remain good. Okay, so some of those bets that they have had put on are really working well. I think Rupesh Patel is, of course, now looking at the mid cap and maybe some of the other funds. They've been able to pick up some of the stocks in the mid cap or small cap space, or for that matter doing the right allocation in some of the large cap categories also, I think is something which is paying well for them right now.
Okay, so let's talk about, you already spoke about Tata Mid Cap Fund in that sense. It's the number 1 fund for June, has moved up in ranking from the number 2 position to the number 1 post. Again, Kotak Emerging Equity Fund in June is the number 2 spot compared to the number 3 spot, and similarly for Motilal Oswal Mid Cap 2, there has been an upping of the rank from number 5 to number 4. So all 3 funds in this category have done well. We spoke about the Tata Fund. What about Kotak Emerging Fund? They've it's a mixed bag of sorts. Tata Global Beverages is probably not the best of performers. Despite that, it's in the top contributors. But likes of SRF, etc. It's an interesting mix of stocks spread across the universe. What stood out for Kotak?
So, of course, one is really the stocks that we are looking at, and yes, there's a mixed bag because the way mid cap and small cap funds work is really it's a completely bottoms-up strategy that you work with. In terms of performance numbers, I think what we are talking about is, of course, some of them have probably delivered between 10 to 15% in the recent quarter, but some of them have been 20 to 30% also in the recent quarter. That really adds up to the alpha. That's one. And two, again, it's a relative ranking. What we are seeing mid caps and small caps is where the performance either has been flattish or negative. That is what is also leading to the performance put up, the positive performances put out by some of the stocks and the funds really stands out.
Okay, I have a follow-up question. The Motilal Oswal Mid Cap 30 fund, which has moved to the number 4 spot from the number 5 spot. Now, if I look at the 9-month returns of Motilal Oswal Mid Cap 30, those have come off compared to the 3-year averages. I think the 3-year CAGR is probably 6%. The 9-month absolute return is about 4.2%. It's probably not done as well in the last 9 months compared to 3 years, yet it's moved up a rank. Why so?
Sure. So, going back to the segment that we're talking about, or the quarters that it really belongs to, fourth and fifth fund. One, clearly their ranking on the performance is flattish. So they were on the overall performance. Their scores were they stood at third rank. They continue to sort of remain there. But what has also happened, their 9-month and 3-year performance, even though it is not outstanding or not better than the peers, but definitely within the fourth and fifth funds category, they are the outperformers, and hence they've been able to inch up a little in the overall ranking. In this case, yeah.
Yeah, but just wondering, the MOSL funds, because they are concentrated and because they take specific bets, haven't had the best last 9 months, despite the fact that they've moved up in the rankings. Would you believe that the number one and the number two funds would be better placed funds to invest in, or nothing like that? The fact that they pride themselves on the equity funding and the equity identification, and the fact that the number 2-4 spot from number 5 holds them in good stead.
So definitely in this case, you have to watch out for their performance. As you pointed out, they're taking concentrated bet. I think that's really the philosophy that they thrive on, and investors who are willing to look at concentrated bets, I think this is definitely a fund they can watch out for. That's one. Two, as a ranking provider, we look at concentration as one of the criteria for risk. So that's why we look at Huff&Dial. And the overall framework basically takes into account both return as well as the risk from a concentration or volatility standpoint, and the overall assessment is put out. So if you look at the this picture holistically, we would definitely say, given the concentration and the performance, which is not really today superlative, I think definitely, the fund needs to be watched out further.
Okay. The last category, and that's the small cap category. Now, there the names don't surprise me at all. Some of them consistent performers, some of them have done really well fundamentally or other in terms of returns in the last few months as well, and maybe which is why they find favor. So, but the kind of contrast in returns is also interesting, and which is why I want your view out here. Firstly, the number 1 fund, Axis Small Cap Fund, stays at the number 1 category, and I think the performance says it all, right? 13% in the last 9 months. Yep. Is not something that most funds would have been able to deliver, large, mid or small.
Absolutely. So it is clearly a superlative performance that we see, almost beating the peers by more than 100 basis, 10%.
Yeah, 10%.
So 10% more than that. I think that's clearly superlative. Where it is really coming from is one, picking up stocks, and I think the names are like Vinati Organics, TCNS Clothing, City Union Bank. I think these are really names, and if you look at the performance of by some of them is 70%, 33% in in the recent past. So one is the performance that they have delivered. Two, going back to the conviction logic, and you picked up a stock, and you've sort of stayed put with the stock throughout the period, and it's not that the fund has just delivered in recent past 3 months, 9 months. If you look at any any quarter, performance cut, I think the fund stands out. It's the first time the fund has come in, because they have sort of met the so I'm likely to believe the 3-year criteria or something. I think it's they have straight away entered into the rank 1 here. They didn't have a rank earlier, but I think so the 3-year track record has been quite good.
Okay, and the one that also stays as a joint number 1 or climbs up a rank is Hdfc Small Cap Fund. Again, a similar question to the one that I asked you earlier. The 9-month return is virtually absent compared to what it does over 3 years for the Hdfc Small Cap Fund. Why has it climbed a rank? Why is it equated to Axis Small Cap Fund?
So the HDFC fund actually has dropped.
Sorry, okay, from number 1 to number 2. Yeah, sorry, my bad.
So HDFC has dropped, and the clear reason being is recent performance. So even though the 3-year performance is good, and I think the point that I made earlier, the recency, the momentum is something also gets captured in the ranking. In recent past, I think the kind of stocks they've had, Balkrishna Industries or Aurobindo Pharma or McLaren, I think they have been draggers, and that has really led to drop in the performance. And again, this is something which needs to be watched out for, in the quarter to come.
Yeah, so again, my question would be that, I mean, when I look at some of the stocks, and again, I have no idea of whether this HDFC Small Cap Fund still has some of these funds or not. We'll get to know about it only later if indeed they have lock, stock, barrel sell. But most of these aren't quite performing fundamentally as well. McLeod, a case in point. BKT didn't have the best of quarters as well. If this continues, then maybe the fund would have a chance of slipping both in performance as well as in rankings?
Yeah, one cannot really rule out that. And it's going to be a combination of some of the other things also. One, of course, what you're holding otherwise in your portfolio. And small and mid cap is, a very small category. There are about just 12 funds today that, we are ranking. So in each quartile or in each category, you have very limited set of funds. So that could also potentially, if you slip by on a performance by one, there's a likelihood of you may slip further. But I think it is important to watch out what do they really stick on to or get out of. I think that is really something which will play an important role.
Okay. And of course, the last one in this category is the Sundaram Small Cap Fund, which I presume was 5 and has stayed at 5. I reckon that some of the pluses that they would have had would have gotten negated by the minuses because the returns over a 9-month period have done well compared to the 3-year averages. My question out here again would be that if on a 3-year basis it's not quite done so well compared to the average of the category, how is it that it is at a number 5 spot? Is it because there are very limited funds and the others are not doing even as well or as worse off than what Sundaram is doing?
No, so of course, so this is really the last, the category that that is there in overall ranking framework. There is a one notch improvement in the performance of Sundaram Small Cap Fund this time around, but some of the other parameters, it sort of continues to remain low, which is volatility and concentration. So they continue to remain, have the concentrated bets. And I think that is where the challenge is for this fund. So it continues to remain sort of flattish vis-a-vis the earlier quarter, the March quarter that we had, ranked this fund at.
Okay. My final question. From the looks of things, some of the financial names are still holding out. Is it safe to assume that if indeed that performance continues, then the ones which have done well thus far and largely on account of the presence on the financials could well likely continue to do well and find preference in your rankings as well? Because arguably the high quality financials is that only pocket along with consumers which are still holding out.
Yeah, absolutely. So if, some of these, I think blue chip names that, we are talking about, if the performance really holds on, and the other aspect that we spoke about is the allocation. If the allocation is not tinkered with, okay, then the performance could be sort of, held on to unless you are making some radically different decisions of exiting or entering into new stocks or new territories. I think that is where, their issue could arise. Again, markets have been volatile. I think after some of the clarification that may come in, maybe on taxation, how the markets really reacts, I think all of them will also determine fate for the, equity markets and the performance of the funds in the next couple of months for the, ranking, the next ranking that we'll release.
Okay. Well, that's some interesting thoughts, some interesting observations, and some rankings, viewers, for you to maybe try and fall back on. I urge you again, try and look at the rankings that CRISIL has put out, not just in the month gone by, but over the course of the last 2 or 3 months. Some consistency out there in terms of what funds have done could well give you some confidence about what these funds could do in the quarters ahead as well in terms of absolute performance. Good having you, Bhushan. Thanks so much for taking the time out and speaking to us at Bloomberg.
Thank you, Neeraj.
And viewers, on that note, it's a wrap on this leg of the Mutual Fund Show. Thanks so much for watching.